So now we will take up new accounting cycle. Previously we have explained you two accounting cycle. First was the transactions were converted into accounting equation, and on the accounting equation balance sheet was prepared and the profit was calculated by applying the formula, and that formula was closing capital minus opening capital plus drawings minus fresh capital. So ultimate purpose of accounting is to calculate the profit made during the year and the balance sheet at the end of the year. And in the accounting cycle, what we were doing, the transactions were converted into journal entries, and journal entries were converted into ledger posting. Ledger posting was converted into trial balance, and trial balance was converted into final accounts. And through net profit, we were able to calculate net profit, and on the basis of balance sheet, we were able to know the financial position of the company through assets and liabilities. Now we are going to learn third cycle. But before I explain you the third cycle, I must bring in your knowledge that nowhere in the world any firm adopts first cycle or second cycle. Means no journal entries are done, no accounting equation is done. You might get shocked, then why I was teaching you all the things. Actually, on the basis of these two cycles, it's quite easy to explain the basic terms and other concepts to the students. Now we are going to learn the proper accounting cycle which is adopted throughout the world. And what is that accounting cycle? All the transactions will be recorded in the subsidiary books. Means first step is find out the transaction, identify the transaction, and the second step will be recording in the subsidiary books. And then casting of books, means making totals of the books. Then ledger posting, then trial balance, then final accounts. Now it might be a new thing for you. On the basis of transaction, recording in the subsidiary books is done. What is the subsidiary book? Before I explain you about the subsidiary books, I must tell you something else. You know, in all transactions are of two types, either cash or non-cash. So all cash transactions will be recorded in the cash book, and other non-cash transaction will be recorded in other 7 subsidiary books. Means there are total 8 books. One is cash book for cash transaction and others are subsidiary books which are for non-cash transaction. And what are these subsidiary books? Okay, let's note down. Number 1, purchases book. Number 2, purchases returns book. Number 3, sales book. Number 4, sales returns book. Number 5, bills receivable book, or in short form BR book. And next is bills payable book, or you can say BP book. And number 7 is journal proper. So first of all, your job will be to identify the transaction, whether it is cash transaction or non-cash transaction. If it's a cash transaction, it will be noted down in the cash book. If it's a non-cash transaction, it will be recorded in one of these 7 subsidiary books. So sometimes the set of subsidiary books is called journal. So let's have a look what is the format of cash book. Cash book is prepared in the same way we used to prepare ledger, means T shape. On left hand side it is debit, and on credit side it is credit on right hand side. and the columns will be date, particulars, LF, amount, and in the same way on credit side, date, particulars, LF, amount. So you might be thinking, then what is the difference between cash book and cash account? Because cash account, why the same thing? Yes, you are 100% right. At this stage, there is no difference between cash book and cash account. In fact, when we teach you about the cash book in advanced level, then you will come to know that there are 3 types of cash book. 1 column cash book, 2 column cash book, and 3 column cash book. So we cannot explain you the cash book in details at this stage. We'll take up another chapter that will be exclusively based on cash book. Then what is the format of other subsidiary books? For purchases book, purchases returns book, sales returns book, BR book, BP book. We are going to make these subsidiary books in a very simple manner. So the columns will be date, particulars, LF, and amount. This is the simplest purchases book, sales book, purchase returns book, sales book, etc. One exclusive chapter will be made for these subsidiary books, but at this time I am trying to give you the aerial view of all the chapters.